So as last night, we had the stock we're looking at, which we thought we'll be able to place a trade on. It was CXO. You all received the email regarding that stock. So that's CXO. So that's the stock. And as you can see, the stock is uptrending. To start with, we're looking to place call options because the broad market being the S&P 500 and the Dow Jones is currently trending up. So when the broad market is trending up, you're looking to place call options. When the broad market is trending down, you're looking to place put options. So because the broad market is trending up, we're looking to place call options. And as you can see, when you're looking to place call options, the criteria I use is the one I got from Stephen Cooper, which is you look for stocks that are uptrending using the moving average 30. So that's the blue line, the moving average 30. So you can see there that's an uptrending stock. So you wait for it to become oversold, which it did there. It became oversold there on the 6th of January with a Williams percentage R of minus 92.66. So once that happens, when it becomes oversold, you wait for it to close above the moving average 7, which is this red line, which it did yesterday. So it closed above the moving average 7 yesterday, and today, as you can see, once the stock continues to increase in value, then you place a call option on that stock. So you can see now that today the market opened at 2:30, half an hour ago, and the stock price is going up. So I'm happy to place a call option now on this stock. So I'll go back to the platform. So I'll go to the options and the options chain. Put the option stock symbol there, CXO. You want all expiration dates. So we've got CXO, all expiration dates. Usually I look for at least 2 months out to give me enough time. So January is out the question. February is too soon. So I'll be looking at either March or June calls to place them. And I already done some of the homework for this last night. I was looking at the March 1190 call. So the March 90 call, you can see the price there, 4 by 3 by 4.6. Again, the other thing you check is open interest. You want an open interest of at least 100. So the open interest there is 1,146. So that's the open interest on this option. So the March 1190 call. So I'll just compare that with the June 90 call. So as you can see, the June 90 call, the open interest is less and it's actually more expensive. Usually if the prices were similar, I would have gone for more time. But since there's a big difference in price, I'll stick with the March 1190 call. So I'll just click on that, which will bring up my order ticket. So I want to buy to open this option. So it's CXO March 1190 call. So I want to buy to open. I usually buy 5 contracts. Now I can see the price is between 4.3 and 4.9. So that's the spread. So usually I trade with limits. If I want to jump straight into the market, I go with the market option, but I always use limits. I usually put the price just in between the bid and ask. So I'll just put there 4.6 and I'll just leave it as a day order. So preview order. So just to check again, it's buy to open 5 contracts of CXO March 1190 call. One contract size 100 to buy at 4.6. Commission is $14.95. Total cost for this option will be $2,000 and $314. And we'll place that order. And we check order status. So you can see that's my pending order. It's not a live trade yet until it's taken. When it's taken, that will become green to show that the order has been taken. We'll just wait and see. So currently I have no positions, so the order hasn't been taken yet. So I'll wait and see what happens to the option. Obviously, if the value keeps going up, I might have to edit. I'm just going to change that to 2 days, 5 minutes. Okay, so you can see the stock is now going sideways. So every now and again, I'll just check the order, see if it's gone. As you can see here, the bid and ask is 4.6 now by 4.9. It's 4.6 because I've placed an order at 4.6. But if this goes up to say 5, then I might have to change that if I still want to enter this trade. But so long as my price here is within that range, I will leave it alone and see what happens. Okay, any questions? Obviously, for options trading, it's good to virtual trade before you start. I mean, obviously, I'm using real money to trade, but if you're new to virtual trading, new to options trading, you go to the toolbox and go to virtual trade, and you can launch virtual trade, and you can then fund your account. Adjust your virtual funds, and you can then trade using, fake money. But let's perfect your method, perfect your technique, and then when you're happy with how you're trading, you can then start using real money to trade. Okay, let's go back to my positions and order status. Okay. Right. Hello, Andy. Can you hear me, Andy?
Yes. Hi, Remy. How are you?
Hi.
Yeah. I just want you to go through with us, if it's possible, how to set a limit on after the order has been taken. Yeah.
Okay. Yeah. Let me go to the virtual trade for that, because I don't have a live trade. Okay. Yeah. And the question is how, once you have a live trade, how you set your stops and limits. And unfortunately, I don't have a live trade at the moment to show you, but what I'll do is I'll go to the virtual trade, because I have some live trades there for teaching purposes. So I'll just click on Launch Virtual Trade. Okay, so we'll go to Positions. So this is some live trades on my virtual account. So again, like I said, your trade needs to be live before you can then place your stop loss and your profit limit and your stop loss. So I'll click on order status here. You can see we have no pending orders, so that's fine. So I can go on and just place the stops. Now this is Apple. Let's use this as an example. This is Apple, which expires in February 11. That's a February 11 320 call. So it expires in February. That's another call that expires in June. Now with this Apple, you can see the price at which I bought this option was 17.4. So that's how much one option contract cost was $17.4, and I bought 5 contracts. So now to make 100% profit on this, it will be 17.4 times 2. That will give you 100% profit. And a 50% stop loss will be 17.4 divided by 2. And that's how, because usually that's the limit I put on my options trading. I go for 100% profit, and a stop loss with a 50% loss. So if I lose 50% of my investment, I will come out of my trade. If I get to 100% profit, I will also come out of the trade. So I usually set it for 100% profit and a 50% loss, stop loss. So 17.4 times 2 will be 34.8, so that'll be 100% profit. And then 17.4 divided by 2 is 8.7, and that gives us a 50% stop loss. So to do that, you click on trade. Like I said, the trade has to be live before you can do that. So you click on trade, and then you can see here sell to close. So make sure you select the option sell to close, because there are different options there: buy to open, buy to close, sell to open, sell to close. They all have different meanings and different implications on your trade. So if you're trying to place your stop and limits on your options trading, you select sell to close. You buy to open your options trade, and then you sell to close your options trade. So sell to close, and we're going to go first with the limit. So our limit, we're going for 100% profit, which is 34.8. Now usually because of the commission, you can see that the cost of commission to enter a trade is $14.95, and the cost to exit a trade is $14.95. So basically, to enter and exit a trade will cost you a total of about $30. So I usually take that into account and add a bit into my limit, so I can make that maybe 35.5, which will cover the cost of the broker's fees. So then you choose good to cancel on the duration. So this limit will stay till I cancel it or until the market gets to my limit. And then on advanced orders, you want to select one cancels another, so OCO, one cancels order, because that way it will let you now set your stop. Because what it means that if the market takes your limit, it will cancel your stop. If it takes your stop, it will cancel your limit. So one cancels another. So if we click on preview order, it will bring us back to the ticket, so we can now place our stop loss order. There you go. So again, you select sell to close. This time we're going to set our stop, 50% loss, which will be 8.7. And again, just to account for the broker fees or commission for the broker, I'll round that up to 9.0. Again, good till cancelled. And then preview order. So you can now see we've got sell to close 5 contracts of Apple shares, limit 35.5, good till cancelled. So if the market gets to that point, I'll make $17,000, which would be 100% profit on my investment. And it's the stop loss, sell to close, stop price 9. So the market goes against me, I'll lose 50% of my investment and come out with $4,485. So once you're happy with that, you click place order. Go and check order status, and you can see that's the order there pending. So now your trade is on autopilot. So the market falls, it takes you out at 9.0 with a 50% loss. If it keeps going in your direction and hits your limit, you'll come out with 100% profit. Okay. Is that okay, Andy?
Yes, that's fine. Thanks. Well, sometimes the sell to close, does it often come up automatically, or you have to choose when it comes to the
yeah, sometimes it won't come up automatically, so you have to choose it.
That's okay.
Yeah, so yeah, but that's why it's important to make sure even if it comes up automatically, make sure that's what you want and check.
Okay.
Now because you want to buy to open your trading position and then sell to close your position.
So is the same thing apply if like your option is getting to the end of its time? Assuming if you have option for February and it's getting to the first week in February and you want to, and you already
okay, yeah, that's a good question. Yeah, because usually I close all my options trade in the last 4 weeks of the life of that option.
Yeah.
So for instance, now you remember the options all expire on the 3rd Friday of the month.
Yeah,
and the last 4 weeks of an options life, the value drops rapidly.
Yeah.
So for this February option, it means the 3rd Friday in February is the 18th of February. So 18th of February is when this option is going to expire. So 4 weeks before 18th of February is the 28th of January. So if I haven't reached my profit limit by the 28th of January on this option, then a couple of days before that 28th of January, probably 28th of January is a Friday. So from the Monday, Tuesday, Wednesday before that Friday, I'll then be looking to exit that position.
Okay.
And again, what I do on that day, what you can either do, let me go back to the positions. If you want to then just come out of your position, what you need to do first is you need to then go back and delete the other status. You have to delete it first. So I have to cancel.
Okay.
Actually, I'll show you something. I won't cancel it, because if you don't, you see what will happen. So if you see here, if you want to trade it and close your position, if you click on trade, let's see, and put our limit. So the market is currently at 2710, 2725. You can put a limit there of 30 for today, and just a day order, and click preview. See, it won't let you to do that. You can see that.
Yeah.
Because you have an existing order, so it won't allow you to do that. That's why you have to delete your pending orders first.
Okay.
So we have to go there. And
the action should still be set to close when you're ready
Sorry?
to do. I mean, should still be set to close on the action column in the.
Yeah, let's do it together anyway. So like I said, first, if you want to close your position, first delete the pending orders. So let's cancel that. So we'll cancel that. So now that's been cancelled. So we can now go ahead and place this trade. So we want to close this trade. So you just click on trade. Now if it's during that 4 weeks before the option expires, if you just want to come straight out of your trade, you can leave it at market.
Yeah, that would be quick.
So you just say sell to close, market, and then if you preview your order and place order, it will just take you out of the trade and close your trade and at whatever price you get. Let me change it. Or if you want to, usually I tend to do it, like I said, if the option expires on a Friday, by Monday, Tuesday, Wednesday, what I'll then be doing is trying to maximize my profit. So you can see here, for instance, now the bid and ask price is 27.3 and 27.45. So I might just say limit 29. Yeah?
Yeah.
And put it as a day order and then leave it like that. And then hopefully I will come out of the trade at an exact price that I know I'm going to come out of a trade for. But if by the Thursday, Friday, I haven't actually been able to come out of that trade doing that, I will just go for market and close the trade.
Okay. All right, thanks.
Okay. But I think that's a good question, because that's a good reason why it's very important to virtual trade first and play around with the virtual trade platform, because options trading, apart from learning the strategies and how to trade options, even placing the trade itself can be tricky.
Yeah.
So it's very important to virtual trade first before you start using real money. Now let's see what's happened to that trade I had. Order status. So you can see here, this is an example of what I was saying. You can see now the price has gone up.
Yeah.
The bid price is 4.9, the ask price is 5.3, so there's no way it's going to take my order at 4.6, so I have to change that. So I'll modify that. So I'll now change it to maybe 5.1 and preview order, place order, and check order status. Oh, you can see my order has now been filled. So my order has now been filled. Let me go and view position. Excuse me. So here we are. So you can see now I now have a live trade. And that's it. I bought it at 5.1 and the current price is 5.1. So at the moment I'm not making or losing any money, but we'll see what happens. But again, this doesn't expire till March, and this is different from day trading. So I have time on my side. I can just wait and see what happens. So I now have to place my stop loss and my profit limit. So to do that, again, I bought it at 5.1, so 100% gain will be 5.1 times 2, 5.1 times 2, which should be 10.2, and a 50% loss will be 5.1 divided by 2, which should be 2.55. So I'm just going to click on trade. Again, make sure it's sell to close, 5 contracts, limit is 10.2. But again, to accommodate for the £30 commission, I will just increase that, I'll round that up to 11. Again, good till cancelled. One cancels another. Click on preview order. And now set the stop limit. Again, sell to close. Stop will be 2.55. But again, just to account for the commissions, I'll just round that up to 3. Again, good until cancelled. And preview the order just to make sure everything is okay. So that's sell to close, limit 11. And you can see the option cost me about $2,000. But if it gets to the limit of 11, I'll end up with $5,485, which is 100% profit. If it goes against me, I'll come out when it hits the price 3, and that'll be $1,485. That's about 50% loss. So click place order, check order status, and there you go. So I've got that trade now on autopilot. So stop 3, profit limit 11. One cancels another, and that's it. So that trade, I can just leave that alone and see what happens between now and when it hits my stop or profit limit, or 4 weeks before the option expires.